Swiss Terminal AG has announced its full integration into DP World, following a successful 5-year partnership. Swiss Terminal has been a major traditional player in the Swiss and French logistics markets. With its terminals in the Basel region, Switzerland, and in Alsace, France, the company acts as a key hub connecting Switzerland, southern Germany, and France, with major European seaports. Swiss Terminal offers a variety of services, including terminal handling, depot and warehouse services, and a state-of-the-art network of rail and barge transport solutions. U.S. President Donald Trump has sent shockwaves through the global shipping industry, and beyond, with the announcement of new reciprocal tariffs. Effective April 3, these tariffs impose significant import duties on several key trade partners. The most striking measures include a 34% tariff on Chinese imports and a 20% tariff on goods from the European Union. Notably, Vietnamese imports face the steepest hit at 46%, a move that has drawn considerable attention. Other countries affected include United Kingdom, Brazil, and the United Arab Emirates, all subject to a minimum 10% tariff. India, which will be hit with a 26% tariff. South Korea and Japan, facing 25% and 24% tariffs, respectively. Alphaliner's analysis shows that Zimline and CMA-CGM will be the worst hit should U.S. President Donald Trump succeed in implementing hefty port charges for ship operators with Chinese-built ships. Of the 73 calls made by Zim, 37 were done with Chinese-built ships. Alphaliner said, this would create a problem for Zim as the 37 calls with vessels made in China represent just over half of total calls, 73. Moreover, most of the Chinese-built ships in Zim's fleet are units in the 5,315 to 7,800 TEU size range which were taken only recently on long-term charter from owners such as Seaspan or Navios. As the Israeli carrier deploys 48% of its fleet capacity on the Asia-North America trade, there would be few options for redeployment. Average container freight rates for Chinese exports have dropped 28% since the start of the year, posting the worst first-quarter development of the past 20 years. Says Niels Rasmussen, chief shipping analyst at BIMCO. Based on input from 23 liner operators, the China Containerized Freight Index, CCFI, reflects the general export freight rate level from 10 major ports. The 28% fall reduced the CCFI from 1,548 at the beginning of the year to 1,112 at the end of the first quarter, not least due to a record-high fall in spot freight rates. The Shanghai Export Containerized Freight Index, SCFI, which measures spot rates for Shanghai exports, has fallen 46% since the beginning of the year, the largest first-quarter fall since the SCFI began in late 2009. Large U.S. forwarders fared better in 2024 than their European counterparts, in what remains a fast-moving and unpredictable market, with unresolved major conflicts and new trading obstacles, posing fresh challenges. Both C.H. Robinson and Expeditors posted annual gains, with the former posting a net income of $465 million, compared to $325 million the previous year, while the latter recorded an 8% year-on-year increase in profits, with $810 million, compared to $750 million in 2023.